My name is Jared Morgan with Bradshaw & Will. I'm an insurance agent, and we're going to discuss umbrella liability. Now, umbrella liability can also be called excess liability. And what is it? Well, you have underlying liability limits. You have general liability and automobile liability, and a lot of times your work comp has employer's liability in it. Umbrella liability sits on top of these limits and provides you additional coverage in case you have one claim that goes above the per claim limit in those underlying policies. So let's say your general liability limit's $1 million. What happens if you have a $2 million claim? Well, the insurance company would take care of the first $1 million and defense costs to the first $1 million. After that, the defense cost and the judgment for the rest of the $2 million is your problem. Well, if you're in a business that has the potential for high claims, and quite honestly, the most likely high claim is on auto liability, that's where your most severe losses are probably going to occur for most businesses, then you may want to purchase another $1 million of coverage, and that would be considered excess or umbrella liability. So it typically sits on top of three policies: your general liability, your workers' comp employer's liability, and your auto liability. And you don't have to just purchase $1 million. Depending on what you do as a business, you may want to purchase $10 million or $50 million or $100 million, depending on how big you are. So when you talk about umbrella, most of the time we're going to recommend somebody purchase umbrella limits if they have significant operations, or if they have significant sales, or if they're considered a target and they are more likely to be sued as a result of it. My name is Jared Morgan with Bradshaw & Will. We've been discussing umbrella or excess liability.